Aussie first home buyers are struggling. Let's have a look. Good evening, everyone. Florian here, and welcome to another episode of HeiseSays. Grab your hashtag recession-proof instant coffee, and I want to talk about an article here which is highlighting, well, a shift in the property buying sector. Well, not really a shift, but more likely a return to the status quo. First home buyers are being pushed out by investors once again. Now, our glorious Labour government, led by Anthony Albanese, gave everyone the ability to borrow on only 5%, and paid up the insurance to protect the banks. And well, that's overheated the market, as we're well aware. And property investors are now make up 2 in every 5 Australian home loans amid record borrowing. Property investors have borrowed record amounts of money for home purchases amid a decline in first home buyer lending and surging house prices. This feels like, I swear, we've read this article before in the past, but history does seem to repeat, doesn't it? At least here in the property sector in Australia. Investors accounted for 2 in every 5 home loans from July to September, the ABS reported on Wednesday, sparking calls for the Albanese government to force banks to put the brakes on landlord lending. Now, people think we're in a free market here in Australia. We're not in a free market, not by any measure. More than 57,000 investors borrowed nearly $40 billion to buy homes over the 3 months, a 17.6% increase on the combined value of loans from the previous 3 months, and a 13.6% increase on the number of new investment loans. Now, I want to see these investors be normal Australians, normal mum and dad Australians, professionals, couples that want to provide rental accommodation and housing for people as a way to increase their wealth. There's nothing wrong with that. That's what I would like to see. That's spreading of the means of production and accommodation, whereas consolidating it into large corporates and super funds, that's a future I don't want to see. First home buyer numbers rose just 2.3% in the September quarter compared with the previous 3 months, but fell 0.23 overall in the year to September compared with the previous year. Owner-occupied loan numbers increased just 2% on a quarterly basis, the data showed. Landlord loans have steadily increased since March 2023. At a faster rate than owner-occupier loans, Mish Tan, the ABS head of finance statistics, attributed 2025's acceleration in interest rate cuts and low vacancy rates in rental housing. The Reserve Bank in November noted investor credit was growing at its fastest pace since 2015, having picked up even before the RBA cut interest rates 3 times in 2025. Rapid rise in investor lending in 2014 prompted the Australian Prudential Regulation Authority to warn banks it would treat annual growth rates above 10% as a risk, forcing banks to cut back. This is the thing. The more you look into a home loan and housing market here in Australia, the more you can appreciate how regulated it is and how managed it is and how rigorous it is. And all of these things add to the cost of buying a house. All of these things are designed to promote stability and a rigorous, well-regulated environment. And that's what the average Aussie wants. They want stability. So if they make the argument that they want cheaper housing, well, maybe we need to open up the market a little bit. Remove some of these requirements and regulations, let the banks have a bit more freedom. I can't see that going over well with anyone. Wednesday's data showed investor credit rising at nearly double the rate, prompting the Green Senator Barbara Pocock to call for APRA intervention. We need to urgently rein in an overheated credit market for property investors, she said. Pocock on Wednesday wrote to the head of APRA, John Lunsdale, urging him to pull the handbrake, and to the Treasurer, Jim Chalmers, encouraging him to direct APRA to intervene. Okay, remember, when you're complaining about the banks, look at all the government intervention everywhere. Regulatory intervention in the mid-2010s dragged down house prices and could do so again, according to Cotality's head of research, Eliza Owen. House prices recorded their fastest monthly increase in 2 years in October, up 1.1%, or a median $10,000, and have already risen more than 6% in 2025, so far Cotality data has shown. But here's an argument. There's a lot of uncertainty in the world at the moment. There's a lot of fear and concern. Now, you could invest in gold. You could invest in crypto, all these assets that people consider safe, or you can invest in the Australian housing market. But what do you reckon? What would you invest in, guys? The RBA Governor, Michelle Bullock, said in November intervention could help stabilise the housing market in the event of future rate cuts, but was not necessary. An APRA spokesperson said in October the regulator was watching for risky lending and discussing limits on investor interest-only or small deposit loans with banks. But isn't this the whole point? We want these small deposit loans for first home buyers that are backed up by the government but not the investors, that are providing a service. They're providing rental houses that we need. We've got a shortage of everything. Welcome to Australia, guys. Westpac and NAB's annual results in early November showed investors accounted for more than 2/5 of new home loans at the two banks in the 6 months to September. Handing down the result, Westpac Chief Executive Anthony Miller said investors were attractive customers and the bank would continue to pursue them with low mortgage interest rates. We've just got to be careful about the outlook and the risks that come from going too far too fast in a particular segment, but we think we've got the balance right, Miller said. So, well, there we go. Let's look at a few things. I think I would like to see. Let's look at some SQM property prices, housing prices. Why don't we let's look at Hobart. We haven't looked at Hobart in a while. Okay. SQM research, weekly asking property prices. Oh. There we go, guys. Good old Hobart. You know, the all houses, 865,000. Hobart hasn't reached $1 million yet. Hasn't reached $1 million, so it's not doing, should we say, as bad or as good as all of the other cities in the country. We can look at, I'll have to look at my city, Brisbane, because this is just insane. I remember looking at this chart in 2019 when we had the bushfire scares and we were complaining about housing being unaffordable. And look at it now. And I know people are saying 1.3 million. What? One better, 1.1 million. Sorry. 3-bedroom house, 1.1 million. That's the measure that we need to look at. I mean, it's not getting any easier, is it, guys? Let's look at the national. Yeah, you can see that. It's the national weekly asking property prices on SQM. 3-bedroom house, 900,000. Let's reflect. Let's have a bit of a chat, eh? So, we're seeing the federal government do what they can to facilitate the entry of people into the housing market. I can't blame people from taking advantage of the scheme, that 5% deposit to get into the market. There's a lot of muttering about how they're going to be paying off more over time or how they're going to leverage themselves too far. We're adults. People can manage that risk. Here's the question. Why aren't there any banks out there that are offering mortgages without this insurance and assuming all the risk and maybe charging a higher rate to attract more clients? Do we really have a free market there? Do you think Australia has the stomach to take the reins off this sector of the economy to the extent where you can see house prices fall to the levels people are waiting on the sidelines for, so it's affordable and comparable to one wage? I cannot see that happening. No chance. Remember the Pyramid Building Society when they went under? What happened? Were they taught their lesson? Or did a whole lot of people put their hands up to the government saying, help us, help us, help us? And I think, how long did the Victorian government take to pay that back? That a tariff or some bloody levy they put in place for that? What do you think would happen in Australia, honestly? Not what you want to happen, not what you would like to see, what you would honestly think would happen. There'd be significant calls for market intervention. Because that's Australia. That's what it is. What can we do to address it? Educate a generation. I can't see it happening. Can you see Australians spontaneously adopting libertarian free market ideals? or calling for greater intervention, and then unintentionally exacerbating the problems that they're facing now, struggling to get in the housing market. Let me know your thoughts on this one in the comments below, and I have a post up on my community tab asking people for, well, essentially reasons as to why Australia's doomed, because I'd like to do a, well, comparison and a ranking. We might do it as a live stream, we'll see. As always, take care. I'll see you next time. Bye for now.